Good morning, all. Happy Fridays. We'll do a quick recap of yesterday's session and then probably proceed to figure out what's next on the markets with the new month starting. Okay. So yesterday, if you see the core plan, okay, we had a plan of saying that this level 17080 and 250 is a potential base, and about 170 200 odd is a potential resistance region. Okay, so we clearly said that within this I'm looking to play a rotational. Rotational means two-way movements, and outside this I'm looking to play a breakout. Okay, so all we had to do is at the open it opened here, it failed to break through, so there was a rotation here, and then there was a rotation here. So I did take these two trades, and here I thought there was some absorption coming in, so looked for a short which failed, and then probably and went long after this point. Okay, so this was a good entry. We'll just do a recap of how this entry could have been analyzed better and traded for all of you from just a learning perspective. If you go into the footprint charts, okay, this is around this level. Okay, what couple of things, if you see, there was some selling activity here, large sellers, then relatively okay sellers, prices holding through, but there were sellers at these levels, so but they were all getting absorbed 17080. Okay, and then there was a counter buying trade, so that was some sign that markets are trying to hold this level. The final nail on the coffin was at this level, when if you see sellers really tried to push below with good selling orders, but there was hardly any momentum on the downside. Candles was very squeezed, and then this buy side candle happened. Okay, though this become a clear indication that the sellers are not been able to push through, and one could have considered longs, if not here aggressively, somewhere around here for a move upwards. Okay, that's for yesterday anyway. So we move back to what next for the markets. Um, a couple of things. I think one is, if you remember, guys, we discussed something like this, where in the weekly charts a couple of days back, where we said this range is important, 17,400, roughly 350, 400 to 17,000 ranges, or a little lower. So we were expecting a lot of two-way movement in this range, which has happened now. I think there was four rotations in 2 weeks that has happened just within this range itself. Okay, so your big swing trade as a swing trader will come when you try to break outside this range, 350, 400, or 17, 950 levels roughly. Okay, so that is where the big swing trade will come. Till then, we would look to test the edges and sort of hold. Okay, and similarly on the downside also test the edges of the range and hold. Okay, that's the big picture. Now, overnight, I think US has pulled back strongly. So we're looking at the S&P charts quickly. If you see S&P, it has really pulled back strongly, and now is trading above the key volume zones that it had made recently. So this was a key volume zone for S&P. Now, from that perspective, 40 to 40 S&P is important. Until we hold that, I think we can look for an upside continuation on the US markets, and similar trickle, news flow and events to follow in our markets as well. So 40 to 40, 40 to 35, watch out for that level in S&P for maintaining your bias on the global cues. Okay, coming to our markets now quickly. What we have is, basis this, what we have is, if you're able to hold above your 330 levels, roughly around this, I would think 330 levels, we would look for an upside continuation for 411 and potentially up to 522 levels. I think these are the two levels that you would want to play as such. Okay, so I'm expecting a lot of resistance around 400, 450. Okay, that is where I think is the key swing decider mark will come out. But at 400, 420 is something you'd look to test in case markets are sort of trying to hold the thing. Another area of long is about 250. So if you get an entry around 250, we can look to consider longs, hoping that this level holds. So we'll 250 something we'll look forward as well. Okay. That is for Nifty. For Bank Nifty, I think the key is to get past 36, 450, 500 levels. That is the key. Okay, once we do 36, if you're able to hold above 500 levels, I am expecting a move to 660, and the core move probably, if you see, is around your 850 levels. Okay, 660 and 850 levels. Okay, expecting resistance at 37k levels. Once we break above, it's a new game, but generally the trade for today is, I think if you're able to get above 400, 450, 850, 900 levels, 800 to 850, 900, roughly this zone. Okay, we'll look to target roughly this zone we'll look to target. Okay. That's for Bank Nifty. On the larger picture also, if you see on the weekly time frames as well, this is the level you want to cross through, 350, 400. Once we do, 520 is a major reference on the weekly, and then we have above that probably 700 levels as well. So these are the two big breakout zones possible. Okay, on the larger time frame. Else we look to rotate back again back to 450 and consolidate. I think this will be driven, whether we break out or not, will be driven by global cues and other factors. Bank Nifty, strong consolidation, same zone if you see on the weekly charts, 36,500 levels. A breakout above probably this level, 36,800 and 37K ranges. Okay. Uh, we would be open to looking, rotations from these levels as well on the top 37K, 37,800, 36,800, and similarly 400, 20 to 450 ranges on Nifty. Watch out for that as a resistance. If the momentum is not large, that is one area you would look to book and kind of wait and see what happens. Okay, guys, have a good day. Have a good, weekend ahead as well. Thank you. Thank you.